Good morning, traders. Welcome to the Traders Lab. I'm Tom B., streaming live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream is about market mechanics, integrating order flow with an understanding of how the market works, auction market theory, and using a tool called the volume profile to observe the integration of participant behavior, that's buyers and sellers, in the intraday developing time frame. The objective is to use market structure in order to overlay or integrate into higher time frame behavior. A note, please, we will be streaming next Monday, and then we'll be taking a week off, which will be next Tuesday, returning the following Tuesday. So there'll be no stream between now and then. So feel free during that time to watch the posted YouTube videos up there if you have interest in trend day configurations and multiple time frame. But we will be back the following Tuesday, which I believe is August 30th. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is about understanding market mechanics to help you get a better understanding of why the market does what it does, how it does what it does, and potentially how you might recognize these behaviors and interactions with multiple time frame participants to potentially help you either develop a trade plan or better deploy the trade plan you have now. And again, this is for educational purposes only, and past performance is not necessarily indicative of future results. Simply put, auction market theory is buyers and sellers coming together. Not complicated. You shop, you're in the auction. There's a retail price where everybody agrees, and there's a price when it goes on sale, where if you perceive it's under the fair price, you'll buy more. Just think about shopping. If the price goes up at some point, you will not buy it, because if you perceive it's too far away from a fair price, that will shut off your buying. And at some point, other buyers will also have the same response as that price moves higher. Now, if the sellers want to engage the buyers, what has to happen? They have to lower the price. And they lower the price to attract the buyers. And at some point, the volume or the agreement between a fair price of buyer and seller will create high volume. And we can recognize that high volume in the volume profile, which allows us to see volume at price. The other aspect of that is that's retail, right? So if you want to equate it to our shopping experience, because we are market participants in the supermarket, the financial market works the same way. It's just a lot more volume, a lot more activity. And the other element to this whole thing is this auction process takes place in all fractals, or as you guys think of it, time frame. So while we can have an auction in a very tight range, it could be a couple of points, there's still a buyer and a seller interacting. And even in a very short time frame, there will be a retail price or agreement between those buyers and sellers, and a too high and a too low price. And if we break away one way or the other from that auction, it gives us insight to what at that place, at that time, what those participants perceive as a fair price. And if the price is unfair, the market can leave that area and go to another one. And it does it in multiple time frames, and we'll be looking at that. The other element is context, and this is where a lot of traders get jammed up. And I'm going to show you a couple examples because I always like to start out with the higher time frame to help you guys see how do these pieces fit together. So we're going to look a little bit at yesterday and the behavior of yesterday and why it's different from today and how you might adjust your plan to get aligned with the developing context, which is definitely different from yesterday. Now, the tool that I use to integrate these behaviors and to look, you might say, under the hood and get to a granular level is an order flow tool, which is Bookmap. And it allows us to see absorption, stop sweeps, icebergs, retail stop behavior, of course, the order flow. We have something called a heat map, the changes in the order flow, and more micro structure. So it kind of gets us closer to the real-time interaction between those buyers and sellers, and it helps, at least for me, it just gets me closer. And in fact, with Bookmap, if you want, you can get down to nanoseconds. Now, I don't know about you, I can't deal with a nanosecond, but it's that granular. So you can zoom in to whatever time or structure is important to you that you can recognize and act upon, and then, subject to your trade plan, potentially get aligned with the market, again, subject to your plan. And remember, this is really about understanding how the market works. If you've been in indicator world, pretty much you're trying to figure out how an indicator works and how to get it to work better, more than likely. But most traders, especially retail traders, never really gain an understanding of why the market does what it does, what the mechanics are, and even how to better integrate their tools, even if they're indicators. If they have a market understanding of the mechanics, they may have a better opportunity to use those tools, as opposed to blindly follow a line that's crossing over that is not sensitive to the context or the mechanics of the market. So this is yesterday. So let's look at yesterday. And this is the close of the day, yesterday. But this is what's important. So this is a consolidation, okay? And 4122-ish down here was the retail price. And this behavior, remember I said it's fractal, it takes place in all time frames. So basically, these are daily RTH bars. And what I do, and what we might do, is when the market starts trading over itself, this creates consolidation, right? Kind of. And you can see this in a 1 minute, bars, if you want to call them, or candles, or 15-minute, whatever, monthly, pick one. It's all the same behavior, so it's generic. And when I get to microstructures, we're going to see the same behavior. So that's the process is really pretty neat as far as the auction goes, because once you understand it, you understand and you'll recognize its behavior everywhere in all fractals and all time frames. But this is a daily RTH time frame, daily candles, okay? Too low, oh, it's on sale, let's buy it. I'm not paying that. I think it's too expensive. See, so this is the nature of auction, and it's consolidation. This orange line is basically the retail price. So even though we are crisscrossing, most of the volume transacted right here. So that kind of creates fair. So unfair, you see, unfair, 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 but look what happened here. Price check, retail, don't take out those stops. Hint, hint, breakout. Now we break out of a consolidation, what happens? All the stops above it become fuel. And then we move up to the next area. Now there's a consolidation off to the left, which you can't see, and this was the retail price in that consolidation. That's 42.15, and that was our target coming up, okay? And that day we got the 42.1475, something like that. But remember, horseshoes and hand grenades. So what happens next? We open and we come back and check it from above, retail, and again, higher time frame. We come back into the basically where the volume transacted in this day, and it's a retail check in the day time frame. Too low. Continue. Trend, 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 right? FOMC day. 43.2750, and we had a target around 43.17-ish, so it was hit, and then we reversed. Wick. Is that too high? Well, so you can see the progression of this thing. Now, at this point, this looks like excess. We all agree on that. So what do? The following day, so this was Wednesday, Thursday, lower high, but this is where it got interesting. This day, we take out these guys. That means the longs. And this day, we only take this low out by, I think it was 2 points. That kind of is a caution flag and we come back inside. If you draw the volume, and we do it day by day by day to include the current volume, that area was 42.76 for the retail price. So, too low, too high, okay? And down here, too low. So too low, too high, too low, right? Lower. So here's the possibility. Yesterday, where do we open? Right around 42.77. What that is saying, and I want you to follow the narrative, it's important, is that nothing had changed at this time yesterday. That is contextual. In other words, if we open, and at that time, the participants are going, nah, nothing's changed. What are we going to do in here? We're going to check both sides, potentially. And that sets up something called balance, because that's what's going on here. And all balance is a term for consolidation, but look what it is. Charting 101. Inside day, both sides active, nobody grabbing the ball. But what do we know? We know this. We also know above this high are stops. So yesterday it was mean reversion. In other words, outside in, shorts, 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 right? We narrated that yesterday. We also had a long opportunity, and we had two targets. We had the overnight high, which was up near the high of the day. I think we got a little bit past it. And then 43.08, which would have taken this out for the stops. And for me, this was possible, and then whatever happens, happens, right? So this was kind of your fulcrum. Now, let's go to today. If you have questions, by the way, post them in the chat. And in YouTube, make sure you hit the cog wheel and you're on 1080p. And there's about a 15-second delay in YouTube. So, be patient. And I will try to answer questions that kind of apply to everybody. Yeah, hi, Sam. So let's take a look. Yesterday. And you guys are familiar with triangles, right? Now, there's nothing perfect here. Draw a line wherever you want it. I wasn't concerned about that. We were moving, though, into the apex. And if you guys know triangles, it's compression and a squeeze. What was the probability? We were kind of thinking downside, but I was thinking maybe we get up and then go down. And again, you don't know. Doesn't matter because we had short, long. All of them were good. And that was yesterday. Yesterday's history. Today, though, change. And it sets up a pretty interesting opportunity. Let's look at today. Change. And when it changes, in my opinion, you need a trade plan for the current context. And this is what's called context. So here we are. And what do? We open. Now, yesterday we opened what's called in value, in range, balance. So choppy, two sides, because nothing had changed. Something changed today. We gap. We open under yesterday's low, and all these longs that are in here, which means stops under here, stops are under here. And what is this price? 42.15. So somewhere on the agenda, potentially, is 42.15. And if we fall out of here, more stops, 41.22. That's how this works. Now, this is the higher time frame. So let's think about this. Now we're talking about the context. We are no longer in balance. Balance meaning inside a consolidation, right? We have broken out. So this is a breakout. What that is telling us, I want to interpret it for you. This is unfair. This was your two-sided auction, and this now, 42.76 is too high. So what was the last price? Here, 42.15. So in theory, too high. Let's return. Price check in aisle 3. And after this, depending on, and it can do anything, we can come out, hang out, rotate, whatever, eventually this, or not, right? Because that part we don't know. But the current conditions suggest shorts, right? So then it's a matter of alignment and the different behavior that takes place in this condition. Because while yesterday you might have been trading both sides, which is what we were discussing here in the Trader Lab and on the stream, right? Today it's only one side, unless you're unless you're a counter rotation trader. So at the moment, the reasonable thing potentially is, unless it changes, is to be looking for mean reversion or outside in trades. Not a recommendation, it's just a lay of the land. Any questions on the context? Because that's our starting point. If you have a question, ask about it. Think about it. Do you have a trade plan? Here's the real question in all of this is, when you recognize change, do you approach it the same way as you would have the day yesterday when the context was different? Is it one size fits all, or is there a way to adjust? An adjustment doesn't have to just be, how the auction works or what you see, but can you understand the sense of what has changed and how do you navigate? And even if you're using indicators, how do you use an indicator in this context versus how you might use it yesterday? If you find that you're trading one way and you're getting different results and you're wondering why it's inconsistent, if that is happening to you, why some days it seems to be good and aligned and other days you just get bashed around, it's probably being out of alignment with the context. And because most of us, when we get in the indicator world, never learn about how the market works and that it has different behaviors, not only in the day type, but even intraday. So for me and in the Trader Lab, what we are attempting to do is get into alignment with the higher time frame, and then get in alignment in the developing time frame, and then use fractals or microstructures to execute and try to get aligned for these higher time frame rotations. Any questions? And then I'll move on to how we started out today. Rare, those are dailies because I'm including the micro composite, as it's called, or the higher time frame. Those are just daily candles, So these are dailies, all right, daily, day RTH only, okay, because that's where the volume is. So every day, now here and here I didn't have one. Here, this started going into balance, so I started drawing one. And then I include as every day progresses, I'm just including it. See? And then I'm also noting where's the lows, where's the highs, where's too high, where's too low, where's fair. Fair. Two sides. Inside bar usually precedes, potential breakouts, So like here, here's a move. Here's an inside bar. What did it do? It went the other way. Now it turned out but we were looking for north at that time. But here, we think we have excess. It certainly looked like it, and there's your inside bar. All an inside bar is indecision. So that's why it was two-sided trade yesterday. While today, at the moment, depending again on how you operate, unless you're a counter trend trader, it's shorts only. So anyway, let's go back to the open, okay? And this is where the first short was. And I think did I narrate this? I don't remember. I think I did. I don't know. I do narrate in the Trader Lab as the day develops when I can. Um, subject to my own activity. So let's look here. Gap lower, okay? Under yesterday's low. So what that's a gap, right? So we understand. Here's the open gap. That is saying we are rejecting yesterday's range, and because we know it's a triangle, it's also a breakout. So we have a breakout of a higher time frame consolidation, right? Here's our open. Now here's what happens on the open, and guys, please take notes, because you need to understand the different behavior and have a plan. And again, this is just a suggestion that you think about things. You think about the market's not one-dimensional. It's a multi-dimensional process. There's different time frame participants. Yesterday was locals, and those by locals, that's like it used to be on the floor. Sorry. It was retail trader behavior. The higher time frame wasn't active. You could tell that because it was just rotational. It was going nowhere. And we were inside. Nothing had changed. The higher time frame gets activated when there's more of and they are responsible for outsized moves. Also, we are responsible because we are typically on the wrong side based on the statistics, and our stops and intermediate time frame stops become the fuel, right? So let's look. Market opens lower. Now here's the first hint. Now let me, again, please take a note. Here's what tends to happen. Let's assume you were short in that consolidation. And maybe you got short on FOMC day, you saw the wick, maybe the day after on a counter rotation you were putting your position on. We don't know. Maybe you were hedging, whatever, right? We don't know. We're not interested in that. We see the reversal, the wick, we see the potential going into balance, which means consolidation. That we know. We don't know. What we don't know is it just, and again, you don't know, except I think we all pretty much suspected, but let's assume we don't know, because you stay in the flow of I know, I don't know, at least you're open to whatever might develop. So we don't know. But we see the reversal on FOMC day, and then we considered the potential to go into balance or consolidation, which is what you saw. Now, there's two possibilities. We come down, it's a fake, we turn back around, we go up, we take out the high of FOMC day and go up to the next level higher, right? That's possible. Not probable, but again, we have to have our mind open. Or that is the extreme, and we now consolidate and break out to the downside. So that's the lay of the land. Now, in the stream, based on the things we know and just based on the lay of the land, and based on the fact the market was rallying, we know where the fuel, and fuel means sell stops, the longs are the vulnerable ones, you see. If you think about it, on this rally, we squeezed the shorts, so all those buy stops were coming out. Once we exhaust out, then who's off sides? It's the longs. And that's the nature of how the market works. It's looking for extremes on both sides, right? So let's go back to the open. So here's our 8:30 Central is RTH open for me. There it is, open print, right here. Now what happens? If you were short, typically, often, what happens is you may take some profit. And so right here, there's 500 stops going off. So open, and a lot of traders will just, they're going to see the open and they're going to look for this counter rotation. And that's what I look for. So write this down. It's called a responsive buying. There's two kinds of, let's just say, trade types that might take place. And think about yourself. If you were short and let's just say you're holding a position and you get a gap lower and you're short from higher up, whether it was yesterday or the day before, might you take some profits? You're not initiating to get long. What you are doing is responding to the lower open. That's the difference between a responder and an initiator. The initiator would be someone who's initiating a new position to get aligned with the trend. The responder is taking advantage of the lower open and responding. So it's a more profit-taking, it's a profit-taking side versus the initiative side. Does that make sense? Okay. So I'm getting a question about the triangle. It's in the beginning of the stream. You can go grab the YouTube link. You can go back and review this. It'll be available probably through 6, 7 p.m. Central Standard Time, and then it'll be gone. So if you just, I recommend everybody review this because we talked, so you guys, in case you missed the beginning of this, I reviewed the higher time frame context and how it changed. So what was happening yesterday, how that we in the stream we were looking at it yesterday and the behavior, how you might interact with it, and today the change in the behavior and what we're looking at right now is how you might interact with it. So responsive buying, 500 buy stops going off, and then right here, 3. Watch. Market opens. Volume is here. Check. Too low. Volume moves here. Check. Too low. Volume is back here. Higher. Exhaustion. Remember, who uses the stops? You get 500 stops here, and this is this is just the way I look at the tool, the stop iceberg detector. And retail traders, right? Who uses these kind of tight stops? You know, it's not the big guys. It's us. Right here, I go, look at that. Exhaustion. Now, for me, I don't know. Right here, I'm going, I don't know. Because it could do this, give a little pullback to here, and go higher. So I am on guard. I want to get short because the context has changed. We have a breakout. We have stops below us. So the goal for me is to find a place to get short. So I'm going to show you the first short. Make sure this makes some sense. So here's what it is. Exhaustion right here is, you can see this volume. Let me try to take it back. Now this is microstructure, and this is not a trade recommendation. This takes practice and understanding. And by the way, there's no reason for anyone to interact here. I'm just showing you how I read it. There's other places to get involved. It doesn't have to be here. It just depends, right? Subject to your trade plan. So if you're going, I don't know, then you don't know. And that's okay. Because there are many opportunities. It's just a matter of yours. So let's watch. So exhaustion, chop, 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 right, chop, chop, chop. You're going, yeah, but this is consolidation. So don't forget who's the buyer. They're responding. Here's the exhaustion. Watch. So we break low, check this. So this was too low, and right now we're thinking this might be too high, but we don't know. So that's why you're seeing this. So, and I know I'm in the minutia, but I want you to see how you might read it and interpret the behavior of the participants. And that's pretty much what we're talking about, right? Right here, break, pullback is a short, potentially, and not a trade recommendation. Stops have to be over the high. So let's watch the behavior. So here's how I read this. Open, responsive buying. And this is called the volume point of control. By the way, just so you know what this is, if it's foreign to you, it is where the highest volume is trading. So it's moving with the volume. So when this moves, and now there's more volume up here, you see this consolidation, more volume than down here, it moves up. We pull back, it's tracking the volume. And in the morning when we first open, it's very sensitive. So it's helping me see, is volume and price moving together? If volume moves away, Is it too high? Remember, we're talking, now this is microstructure, so you're going to look at this and maybe you'll go, I don't know. And don't worry about it, because it takes time to see the nuance. But I'm not suggesting that this is, shall I say, a structure that you guys might interact with. It starts out to understand the process, which is the auction, which is what's the purpose of the market. Too low, where's too high? Too high. Too low, and it's auctioning. Remember, participant behavior. Where's too low? Where's too high? Oh, it's a deal. Well, I'm going to cover. That's too high. How about down here? Well, that's retail. That's too low. How about back up here? Oh, that's too high. Exhaustion right there. Then what? Let's check here. That was retail. Too low. Come back. Too high. And again, I still have this. And I'm going, Liquidity comes in. Order flow. Break. See the reaction? Pull back to where? Where it was too high. Where the liquidity was. Break. This is your short right here. Where's your stop? Above here. What's your objective? Risk neutral. Your stop then, depending where you enter, and let's assume you're like me, I don't sell this. I go, there. Okay? So 59, 61 and a half, 62. 3 points. You know, guys, right? I always talk about I try to keep my risk to 3 points. So now, if I'm in at 59, I need to get a scale. Where does it pull back? Watch. Here. Scale, risk neutral, next target here. Watch. There's more. Pull back to where? Watch. This is taking out the stops right here, and it's only a stop pick. Target. Now there's more. Now this was the ETH volume point of control. Basically, at the end of a session, wherever this is, was the fair price. If we open away from the fair price from the last auction, which is ETH, then this is a viable target. So too high, price check in the next bigger aisle. And there's another target below. Let me just show you that one so you know. It's the overnight, wherever it was, overnight low, which I think is here, 42.40. And that's the primary objective on this at the moment. So again, open, short. This could be a short also. So here's the thing. You get short here, if you're running a tight stop, you would have a scale, you would scratch, you'd put it back out, you would scale, you'd get your next target, and then there's another short right here. Here's how it works. And then I'll answer questions. I just want to show you. Here's how this works. So, short, scale, target. Okay, we got that. Break below. Remember, here. Break below. Break below. Break below. These are short opportunities, okay? Now recommendations. Watch. Chop, chop. Target, right? Sorry, where is it? There it is. Sorry, lost it. There, target. Break below. Pullback. Target still open below the overnight stat. Short. Add or nothing. Target. Are you guys tracking? Right here is a sequence in alignment. And you can see what I'm trying to show you guys is the behavior. Because if you understand auction, in other words, how does this thing work? You're going to understand that it's checking prices, just like you in the supermarket. And it's going to blow past. It's going to go into stops. That's trading. That's the way it works. Real world. And it doesn't matter. Because the goal is to get risk neutral and then be able to fund your trade to the next location here. And then new setup here if it's in your trade plan. and then next target. This is the overnight low. We have more targets, but I'm just going to keep it at that at the moment. Do you have any questions? Billy Bob, it's just subject to, you know. Uh, Billy Bob's asking, why don't I wait for the opening swing low? Well, you can. I read the auction, Billy, so I'm in a more sensitive position to try to see the nuance. That's what this is. Now, where's the opening swing low? Well, initially you might think it's this. That might be the opening swing high. See? So opening swing high, is that opening swing low? Failure to take out the high is a short. See? But now is this the opening swing low? Which one of these is the opening swing low, you see? Would you use this or would you use this? And then where's the pullback, you see? So for me, I'm looking at the auction. So I get more immediate information. Now, it doesn't mean I don't take a stop. I mean, you know, I'm certainly okay. I'm never euphoric about it. But if I follow my trade plan, that's my accountability piece. And it's just one, you know. So if I take a trade here and I didn't get my scale and it comes back on me, you know, I could take a stop. That's okay, because look at my potential. My trade is down to here initially, so I've got good risk reward in this thing, you know. So if I didn't get scaled and it did this move over here, I get taken out, I put it right back on again. That's just my plan, because I like a 3-point stop to probe the market for location, because I know this today is going to be an outsized opportunity because of the context. But I use the same process, you know, even when we're trading in range. I just know, like yesterday, it was much riskier because and you saw yesterday's range, we opened kind of in the middle, went up, went down, went up, you know, it was two-sided. So that's a different context for me. I don't trade like this in that context. But in this context, breakout, I'm looking for the responsive buying. It's pretty limp, you know. I also know this high is vulnerable because we're going to get shorts in here. So there's two possibilities. We open responsive buying and then we roll over. We open selling and then squeeze, take out the weak shorts, the early shorts. So I know that. So that's the possibility here. But then again, after that, I don't know what'll happen, of course. So I have my trade and I put my trade on and I get my scale. And if I get taken out, I'm out. If I see the exhaustion, it was just a squeeze, which is what it was. I put the trade right back on again. Again, that's just me. I'm not recommending that, of course, because I don't make any recommendations, and everybody has to formulate their own trade plan. Anyway, I hope that answers your question about the opening swing. You know, yeah, Billy Bob. Yeah, you know, it's really. So for me, I'm reading the auction. Remember, this is auction market theory, so it's, you know, too high, too low, too high, too low, too high, and then what? Stop pick. Thanks for playing. You're out. Now we can go. So I anticipate the behavior because I know retail trader behavior. Where would we all put our stops? Here. And if it comes back, yeah, we're out. That's why the idea is to scale, to allow the trade to have time, because we don't know. But then once they're out and we have exhaustion, then the train can pull out of the station. And there's another short here if you needed it against this, with a stop above here, right here. Doesn't have to be above here. It's above the auction. Let me show it. I'm going to go in and show it to you, okay? And you guys should take screenshots if you have any interest in this of the behavior, because it's not random. The rotations are random, but the behavior of the auction is very organized. You know, remember, this is too high, so too low, too high, chop, chop, chop. It shifts down, so right in here, short, short. Okay, so short. This was the first short, right? This is the one I showed you right here. Break, pull back, stop pick right there. This is nothing. You see it? Nothing. Pick, break. This is still up here, don't forget. This was too high. Break, pull back. You've got this level here, which was too high. Stop pick, which means not real, just squeezeteria. Break here, or break, pull back to here. See the symmetry? So here, here, shorts. So, I mean, there's multiple ways to engage with this thing. Target, all right? And then, once we break below it, which says this still is too high, otherwise we would have bounced off at pullback, short, target is this, overnight low, next target, and then, you know, wherever. This trade is done. Okay, so that was it, with a potential add or whatever, or initiation, if subject to a trade plan. Any questions on this one? Yeah, price, yesterday was an interesting day. I was kind of thinking we'd squeeze a little higher, which is why the long side came into play later in the session, because I know we, you know, not know, but suspected we would get more shorts in there. And in the morning, we had that. It was mean reversion yesterday, outside in only, no inside out trades. You guys remember that? I was saying, no, we can't trade in the middle because of what the context was. That's why yesterday is so important, I believe. If you guys want to figure out, I was going to say, context and the differences of the how you approach the market, you need to go into yesterday relative to where it is to the preceding days, because it's in a big consolidation. And then how do you trade yesterday compared to how you trade today? They're two separate trade plans, in my opinion. And if you can separate them, you're going to get a handle on context, and you're going to be able to adjust to what is actually happening in the market versus just trying to do the same thing. Because the same thing, if you were trading yesterday, like today, you would have gotten, I think, pretty much demolished, or potentially not had, let's just say, a positive outcome if you tried to trade yesterday like today. If you tried to trade today like yesterday, you still could have a problem. And I got to say, it's not a recommendation and all that, and past performance not necessarily indicative of future results, but I think you get a real edge over other retail traders who are bound by indicators that are not context sensitive. They're just price sensitive. It's very different. And it's not that you can't integrate an indicator if that's your thing, but if you know context, I think you would have a better idea of what indicator to use and how to use it, because you would use them differently, I believe. And again, I don't use any indicators because, you know, I don't want the conflict and I don't need them. So let's continue. Now this is current, so this is now what was going on before. Now this is an important event right here. This is called the volume point of control. Now remember what the volume point of control is where all the volume in the developing time frame is taking place. What it is saying here is now what was above us is too expensive. And I call that VPOC migration. In other words, when we first opened up, right, we were doing this. And this was our initial target, remember? Well, when you fall out, and then we broke below, which is saying this is too expensive. And all the volume up here, now I'm going to make a little mark in here. I call it a variable high volume node, and I think the likelihood of getting back here is pretty low, but then again, I don't know. So I just sort of go, yeah, I don't know. But I mark it because what it is showing me is this was an auction. The participants did a lot of volume up here. We rotated, and that's what you're seeing in this. Oh, I like it. It's on sale. Or maybe it's just I'm covering. See, who's buying? Are you anybody buying? I don't think so. I think it's, see, the other part of this, who's a buyer? Is it somebody who thinks this thing is going up? Or is it someone who is sitting short and they're trailing stops, or they see they see a counter rotation and they cover? See, that's when I was mentioning on the open, who's buying, who's selling, who's initiating, who's responding. It's a difference because the responders are weak. It's the initiators, or call it the advancing army, in my opinion, is who you want to get on that side. If there's a counterattack, and a counterattack might only be buy stops, trailers, us, retail, who are covering. But this is our over-under. Now, the key to this is we fell out. In other words, too high, right? I'm not paying that. Let's go to another store. The volume point of control shifts down here. It is saying too high. And now the market is accepting a lower value. And it's going to rotate again. It rotates, right? Oh, where's too high? That's its job. Where are we not going to buy, right? You're the buyer. You're out shopping. You want to buy an S&P. Where do you want to buy it? Well, are you going to buy it up here, or do you want to buy it down there? Well, if you're inclined to be covering, you'd be doing it down here, and you'd be looking to get selling or not buying up here. And then you get this. That's called consolidation. So in all fractals or time frames, we're doing the same thing. Does that make sense? Rare, the ETH VPOC is the fairest price in that auction. It is the most recent behavior in the participants. Basically, even though it's light volume, it's a valid auction. It doesn't have the same volume, of course, but it has enough volume. And what if we open above what the most recent auction was? It's reasonable in this context because we opened out of balance, rejecting the consolidation above us, and we know there's longs in the market and a lot of fuel to the downside that we're going to come back. And then we have that overnight statistic, which is over 90% probability. It was sitting right under here, which was the next target. And then we have something called the initial balance statistic, which is the first hour RTH high or low, over 90% that will take either the initial balance high or low out. Well, all things considered, we'd be looking for this one, and we'd be looking for the overnight low. Does that make sense? So there's organization in auction. It's you can see it, and if you understand it, why? In other words, you got to understand why. Why would we, if we reject above and break out, why would we go to the most recent auction, which is this, ETH, and check it? And then if we have statistics over 90% for the overnight low, which is under this thing, the VWAP, and over 90% for this, that we might be somewhat confident that these are on the table. Not a recommendation. Past performance not necessarily indicative of future results, etc. You got to vet your own ideas. But that's how I kind of go with it. I go, okay. And my logic is, if this, then that. If not, then what? And then how do we engage? Now any questions before I move on to how do we continue to engage? So where are the stops? Let's look at the moment. Where are they? The VPOC is now at 42.39, which is right here. This is our new retail price. Let's go a little bit further. I won't go into the IB low. I didn't narrate it, but it is another continuation setup. Maybe I should talk about it briefly. I guess I will. By the way, PDFs of all this behavior is available in the Trader Lab if you have any interest in it. This is, remember, over 90% probability that we'll take it out. And we know there's long liquidation. See this 800 sell stops coming out. See, when you see the big numbers, that's really where the momentum is going to be. 800, see? Now look at this, 1,000 buy icebergs, 1,000 buy icebergs. Is that, what is that going to do for us? Let's see. Now we're coming back here to potential location. Let's just see. No. It was actually here, but it was just nothing. I didn't discuss it, so we're just going to, but it could be, if you have a plan for it, this is also another opportunity right here. Where it runs into trouble is right at the low. You see this chop, 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 chop? It's a consolidation. When you break out of it, the trade is over. So I don't know, but it's a setup we discuss in the Trader Lab. But here's what's more material to me. Where's the retail price? Here. Where's the stops? VWAP. Do I want to join these guys? No, I don't. Where's the mid? 42, 43, 75, I think. Somewhere up in here. So mid VWAP. So what do we have? There's a couple possibilities. We know there's stops at VWAP. In my opinion, that makes it a bit risky. Of course, everything's risky in trading. So we can anticipate retail trader behavior. Two things. Stops above the VWAP. But this is a location for a short, so this is very conflicted. So, and here's why. Too high. Is this too high? Or are we done for now and we're going to squeeze? So where's the stops? Mid, which is right in here, this little red thing, and VWAP. I have nothing I can do in here, even though this is a potential short. This creates more risk for me because retail traders are going to have their stops here. Do you guys remember you keep your stops up there? And do you also remember you automatically would sell the mid or the VWAP? I cannot engage. And it doesn't matter that this may go from here to here, and this is my target, by the way, down here, somewhere around here. Remember? I got to put that on the chart. Where'd it go? 42.15, right? Now, by target, all it means is maybe, maybe not, maybe someday, maybe never, right? And that's called the micro-composite volume point of control. In other words, it's the next higher time frame, which is the ones I was showing you at the beginning. I got to put it on here, just so you know it's there. So nothing to do. Remember, I'm not calling trades. I'm giving you a sense of context and retail trader behavior. So if this was not in this here, this would be a short. However, we have a swing high here and stops here, so I have nothing to do. So we're just going to watch it, okay? So I'm a tourist. And remember, my trade plan incorporates retail trader behavior. So in a vacuum, short. This, nothing to do. So let's keep an eye. In the meantime, you got questions, throw them in there. Here's the other part of this. This is a short with the problem. As you know, this is a problem, this is a problem. So, and the reason is we can come down here, pick some stops, and then reverse back. So I consider this a tough, because for me, there's a couple elements. One, I want these guys out. The other part is, this is my obstacle. So I need the range, because this would be my first target coming down. So I have nothing I can do here. Because while this is partially, I say partially, a setup, it's got some pieces, it's got context, it's got location, it has problem, VWAP. So nothing to do. And then this is the target for scale. I need the range. So do I want to join these guys? And let's look to the left. Where's the last swing? Here. What's above here? By the way, write that down. Look to the left. Aren't there stops up here? So this is a real, for me, it's just, I'm going to go, not so much. And it doesn't matter. If we go and take the low of the day out, which it certainly can do, I just go, okay, it's not my trade. Because for me, risk is, risk mitigation and understanding market mechanics is job number one. With this swing sitting here and stops sitting here and stops at the mid, all this is a risky location to engage as I view it. And again, even though this is a short, it just doesn't have the right elements. If these guys are taken out and we come back, then it clears the deck for me because they took this swing out. See, is that logical? Value area high, there's really no value at the moment. Yeah, maybe. I mean, if it got up to, and the developing value area high is just below the mid. If we got up there, I wouldn't be selling value area high. I'd be looking for the squeeze above the mid, and that would set up a potential short. I mean, for me, I want these guys out. This is my, location to scale. So the problem, what's my range? I can't enter here. You see, I'd be entering probably here. There's just not enough meat on the bone, because my risk stays about the same. If I get in over here, it's 37.50 to 39.50. So it's about 2 points or so. It's very tight. So it's not my trade. It is my trade except for this. See, because I have another component of my trade. Setups have to be qualified in a couple areas. One is where's the stops? If they're taken out and there's no follow through, it makes this a much better opportunity. But there's not. What happens is if I join here, I know there's a bunch of stops sitting right above here and here, and we didn't take them out. You see, so to me, it's just not a good play. And I have to be okay that when I see this, or if it goes down and takes the low out, I have to be able to not. I have to keep FOMO in check and crazy, because I get stimulated. But it's more about waiting for the trades that are, let's just say, have better probabilities than. So for me, the better probability is this thing gets taken out and then we fail. That sets up a better trade for me. All right. Now, for those of you who are okay with this, then that's your trade plan. See? Yeah, DNT, that's how I look at it. It's not just so you guys know, I'm narrating. I'm on a different book map. You'll like this. This is brilliance. This is what happens on Friday. This is where the stops are above here. So here. So for me, this is a setup. Except this is a problem. That swing is a problem. So I can't engage, and this is my scale. See, so all of this is kind of okay, but it doesn't qualify. So I can't do anything. Now I have to manage my emotional state. That's about what I got to do here, which is fine, There's so many opportunities. For me, it's not like, gee, I should have done this, I should have done that. When you start having that emotional state, it's all being triggered, and it's not a good thing. It's more important that you develop the discipline when not to trade, because over time, what you're going to remember is the times, the trade does whatever you think it might do. You will not remember the times you didn't wait and follow your trade plan, because the mind is selective. And then you'll be, or if you're going, how could I have gotten this trade? This. That's not in my opinion, again, just my opinion, not the right process. The right process is hugging your trade plan, and you grade yourself by your trade plan. There's thousands of trades if you survive long enough to have a career in trading where they become somewhat inconsequential. Any one of them is just kind of it's a metric at some point, you know. So anyway, that's the way I look at it. And it wasn't that I haven't had all those thoughts and experiences and emotions, because it's just part of trading. It's what you do and how you recognize them. And instead of in other words, I'm going to encourage you to recognize the behavior that deviates from your trade plan. If you don't have a plan for this situation, maybe you ought to have one. For me, the plan is not to step in front of this, but to use it to my advantage. And if it doesn't show up for me, then it's because of its proximity, you see. Now, if this was, someplace else, it wouldn't be the same. I'd be short. But because of the swing and this, and I know I'm kind of going over it, but it's important to me because part of market mechanics, think about it, you think from two sides. Also, it's part of anticipating where the market might go and why. Just like when I was short going for that overnight volume point of control or going for this. Why? See? And now pull back up here. Why might it continue? Well, because of all the structure. Why might you get squeezed? Because of this. So I can't do anything. Because my setup, I want this. I don't want to join these guys. Because now there's stops here, and there's maybe guys trailing stops in here. So the buyers are starting to stack up. And when I say buyers, buy stops, not buyers. Different, right? So when the market counter rotates, what is it rotating on? The buyers are the stops. I don't think you're going to find buyers saying, wow, this is great, we're going back to the high of the day. I'm not saying it can't. What I'm saying is, would you get long here? Michael, grab the link. I can't go back to the open. Grab the YouTube link, and then you can watch it and just go back and take a look at that. You can look at it right now, or just grab the link, and after the close, whenever you want, this recording will be available probably through about 6 o'clock this evening Central Time, and then it's gone. So you can kind of review it and fast forward it, or whatever you want to do. Something else, guys. 2 points. One, I'm not going to be streaming starting next Tuesday through the following Monday, which means I'll be returning the following Tuesday, August 30th. So, I'm going to miss all of you. The other part is, in the Trader Lab, we have about 60 PDFs of these behaviors that you can observe in different contexts with meticulous notes, circles, arrows, little things, stuff like that, and a video that I did, an advanced trader webinar I did for Bookmap back last year that really is an overview of these mechanics, if you will, and give you a better understanding of the auction. Why is it doing this? Well, if you understand auction, then you understand the behavior, and then how you kind of can identify context, and not only the context in the higher time frame, but how it changes intraday, so you can try to stay in alignment with it, because it changes. We can be directional like we were in the morning, and now we are in a different context. How do you adjust? And how do you integrate the changing intraday development inside higher time frames? It is multidimensional. So you can get somewhat of a better handle on that. If you watch that, it's about an hour. Great watching over the weekend, It's worth an hour, I think. And then trend day configurations. How do you operate the trend day, which is not the same as rotational like we had yesterday? Yet there are aspects that are similar in certain ideas. For example, we are now in balance, which is this, back and forth two sides. By the way, here's our stops coming out, so we're going to watch now. That creates something called mean reversion. That's an outside-in trade, not an inside-out trade. So while this is doable, it's still going to be doable. We're going to be looking for outside edges, not trade, by the way, not a trade recommendation. So where's our outside edge? Let's go take a look. Our outside edge is up here. So now we want to be looking. So we can anticipate stops at the VWAP, right? Stops at the mid, and stops up in here. So this is our area to start observing. Let's watch, okay? And these are not trade recommendations. Remember, not a trade calling room. So now we got our stops only 19, 171.19. Now watch. Right here. Watch the behavior. Microstructure right here. So watch right in here. Just watch it, guys. It can do anything, so don't think anything more than that. But this is microstructure. Potential exhaustion. You got to watch. Now, it's not there yet. It's like getting ripe. Watch this. Just watch it. Now, don't forget, mid, low volume area. It can squeeze further. Not saying it's ripe, just saying observe. This is micro high volume structure. This is stops. This is alignment. Just watch. Not a recommendation. I really want to caution you guys. This is not trading, calling. This is behavioral. So we're going to observe it. Nothing to do. We're just watching. Right? So there's a microstructure and an auction. Volume is here. Retail. Volume was here. Retail. Too low. What's up here? The fuel. Let's watch. That's why it's if this, then that. If not, then what? Watch this area. Watch this area. What's up there? Stops. What are we going to get? Mechanical traders right here. This is where the vulnerability is going to be, up in here. So we just have to watch. And you got to watch for the order book too, because that can give you, as we say, shenanigans. Who came up with the word shenanigan? I got to look that up. Ingrid, I don't, which video? If you're talking to the fundamental one, go to bookmap.com. You'll see a little link in there that says join a Discord chat. You don't have to be a Bookmap subscriber. You won't be solicited. And then you'll see, after you go through the little welcome thing, Trader Lab chat. And pinned to the top of the Trader Lab chat, there are about 60 PDFs you can download. So you can kind of look at this stuff and think about it. And also that video's up there too. So you can watch that. Maybe watch it this weekend. So let's watch our behavior. See, we're kind of in the area, right? Stops are still here. I am extremely cautious because. So let's watch the order book. This could be algorithmic behavior, you know, and lots of times what I observe, and I'm not saying anything more than observations, and you should, if you're interested in order flow, you should attend our advanced trader webinars. That are specific to order flow, so you can kind of understand what this is about. This, right, we see a seller, we see the book thickening up. The thing you got to be careful about is we're right in front of the mid. They are pulling, which opens the door. However, one of the things I observe, and I have no idea, by the way, is so far this is selling, right? I mean, this is a selling scenario here. This would be where we might go. But you have to, now they're adding, so that's good for the short. So let's watch it, see them coming down. It's all good. If they flip it and then pull here, it's going to take it up into the mid. So there's a lot of games with this. So they can be getting us trapped. So you know. And that's your possibility here. But so far it's supporting the short. So this is what it has. And then this coming down is supporting the short. Now you got to watch the behavior. So we'll watch the behavior. I have nothing to do here. This could be a short, but I want this. Just like I wanted this. See? Stops. Now this might be your short, and I have no idea. I have a trade plan. I don't, and again, you have to follow your own trade plan. This is a short, but I have a problem. Same one I had with the VWAP. So I have nothing to do. Again, just me, because of this. So let's observe it. Yeah, Ingrid, did I answer your question? Did you get that? Huh. Gee, Falcon Boy, thanks for that. I'm just finding out what shenanigan is. Monkey's asking me how I know about stop picks. Retail trader behavior. In other words, what do we do? Us. Where do we put our stops? VWAP mid. Where do we automatically sell? VWAP mid. Do I want to join the retail traders? No. Am I willing to let the trade go and not be on the bus? Yes. Why? Right here, you're seeing why. This is why. Stops. And this area up here, outside edge, what is that outside edge as a consolidations? Stops. So this is a vulnerable area, but it sets up my opportunity. My opportunity is going to be, now guys, remember context. How do we operate in I don't know if you want to call this a trending environment, but let's say kind of, I mean, we're out of balance. We've broken out. Market went down. It is floating in air here. It has not resolved, in my opinion, to what the downside potential is. So now for me, it's outside in. That's called mean reversion. And mean reversion is outside from somewhere back to the mean, which is this. And if you guys remember yesterday, we were trading both sides outside in, right? And it was short, short, short because of the morning the context was short side. Based because we opened in range and value, so two sides, yeah. Today, it's one side, outside in. So it's using the same process, anticipating retail trader behavior, which is here, right? So I'm looking for the stops. I don't want to join the stops. Call me chicken, but how about call me experienced? Where's the stops? Here. Here. So above the mid, up into this area. Nothing is up there except stops. Does that make sense? See, I'm not saying it'll do anything. I have no crystal ball. I do know retail trader behavior. So why am I going to do something that they would do, since we know they don't do so well? Does that make sense? Jana, the mid is the high low divided by 2. So here we are. Let's watch now. Now, is there any surprises? You may say yes. To me, no. And write this down. Think like a retail trader. Don't act like one. If you can think like a retail trader, then you can anticipate their behavior. And that'll be stops, selling, and then maybe further. In other words, we don't know. But this is setting up now a potential opportunity, and I can't say it is, isn't, or anything. This is where you would scale. So let's observe, not a recommendation. Let's just watch it. Just think about it. Watch this behavior right in here. Chop, chop, break. Looking for a behavior right in here. Not a recommendation. We're just tourists, right? There's alignment. We'll see what it does. I have no idea, by the way. This is vulnerable. So we just have to be watching. If we don't get squeezed here, you're seeing this exhaustion. So we're watching. Important. If we squeeze, boom. Do they pull? Or do they pull? We're bracketed here now. Let's watch. No ideas. This is all key behavior. There's your volume. There's a little hand on the lid, a little lid pushing the cork a little bit maybe. They can pull. They're bracketing down here. They're pulling. Let's just try to watch the order book. Not a recommendation. Really, guys, just watch. Because there's no way to know, and that's trading, what it'll do. This is still vulnerable. So like any trade, the best you got is maybe. If we rotate down from here, no idea. See, they pulled. We can now pop higher. This is how the order book can fool you. See? Pushing lower, flip, pull. Now can go higher. And I have no idea. So that's for me why order book, very slimy. Because the algos that are in here can just as easily throw this out here to get you on the wrong side. And there's no way to know. Now remember what our target is, right? Mean reversion. So where's stops? VWAP. So, and look at this guy coming in here. So, see him? That's algo. So you can see how it's automatically moving, jumping. So the trade is the short, right? To here, to here. That's this basic trade. And that's based on, you could do this with this. I'm only, by the way, in the Trader Lab, I only discuss 2 lock configurations. In other words, the purpose of the Trader Lab is to kind of create foundations that you can build a business off of. But without a market understanding, nothing. You're going nowhere, in my opinion, unless you understand how the market works and what the purpose of it is and the interaction of the participants, why. So once you understand why, and then you can see the configurations as they unfold, I think you have a better chance of getting and staying in alignment. And if you understand retail trader behavior, that's an asset. So we start putting these pieces together. That's kind of the idea, right? Does that make sense? The F VWAP? No, I don't. I do not take I'm getting a question, the full session VWAP here. Well, no, but it's not. If I'm in a vacuum, I might think about it. But the current auction supersedes, because now the overnight and the overnight low, all that is done. I'm now operating in the day time frame auction. In other words, this is the most recent behavior. So what I'm doing is I'm kind of letting developing context overlap yesterday's context, which we're out of balance, so it's not, it's not in play at the moment. And then the most recent context was ETH, so I'm going to work with the ETH context until the current one that is developing supersedes it. Now I'm operating in this. So that's why the mid, this LVN area. So that's why I short to here. Notice? So I'm now risk neutral. If that was in your trade plan, and you guys know it's in my trade plan. But I don't call trades, so you know. But this is, now there's something going on right here that I have to be careful. See what's happening with the volume? The volume is beginning to migrate. That is a bit of a warning, Will Robinson. I call this VPOC migration. So now, for this to go lower, I have to get below here and here. If I can't get below, then we have the potential to come right back and squeeze. So we'll see what it does, okay? So you remember when we got short, we had the migration going the other way for the short side. Now the VPOC is migrating. What that is suggesting is This down here was too low. This was too low. We checked here, too low. We move higher, so far too low, and that could suggest a squeeze, and I don't know. So I don't need to know. Why? First target, here, scale, hold, helmet. Nothing more to do. Next target or scratch. Is everybody tracking? Major Tom, I don't see the context changing to up. I see the context as counter rotations. So I don't have any long ideas. I don't trade the counter trend. I kind of look at it where I use the counter trend trades to get positioned and get aligned with the higher time frame. Because I'm not interested in, this. Because I know, here's a way to think about it. And I don't know what the market will do. Remember, that part I don't know. It's all random in the sense of how and when. But unless something changes, I'm only a seller today. And it's just a matter of using the counter trend rotations to get in alignment because I have targets and I want the range. If I'm running a 3-point stop, which is about my thing, I want this. I want 10 points, 15 points. I'm not trading for this. Not even worth it to me. It just has no meaning, no value. Because if I got to risk about 3 over here. Well, what am I risking 3 for? Where am I going? So I'm just talking about me. I'm into the high, this is not scalping and I'm not trying to trade this. I did previously. I'm not saying I never have. You guys who've been following, there were times I would be taking over 100 trades a day. So I've been there, done that. And what I found was, because when I started out, there was none of this. It was swing trading and trend following, So my orientation was not to fiddle with this stuff. It was always to try to get larger rotations. But over time, you get kind of curious about, can I do it? Does it pay? But it didn't. My broker liked it. When you start getting a gift basket from your broker at the end of the month, you have to, something ought to be a tip off. So anyway, for me, it just didn't make any sense because my risk is pretty constant, And when I got Bookmap, I actually was able to reduce my risk. My stops had to be wider because I didn't have the granularity that I have, now with Bookmap. So it helped me. So what that meant was tighter stop and shorter because of better execution and shorter distance for risk neutral. That really impacts your metrics, So that's kind of how I experienced it, Does that make sense? So anyway, for me, unless something changes, but long is not on the laundry list. And if it turns into a long, I'm done. I just doesn't matter to me. Because to me, I got to ask yourself, based on what you know, based on, quote, the good news, which was the FOMC, and we rallied and squeezed into it, then the news comes out and we make a top, then who's on the hook? It's all those longs. Well, they're below us still. There's more meat on the bone here. So we're cleaning these guys out. And where's our low? Let me take a look. 25. Well, what about these guys? What about their stops? And then we have 42.15. So for me, 42.15, but that's not the end of the planet. That's just where this fuel is, and this is retail. Now, where the next layer of stops? Under here. So now when, how, if, that's not my job. My job is to attempt to stay in alignment. So right now, do I want to join the guys that are getting blown out? I don't. Do I want to get long for a counter rotation? I don't. Let me tell you why. who is long? Who is the buyer? Now, I'm not saying we won't come all the way back up and come here, right? Because it can do that. But I gotta say, I'm more inclined to think this. The reason is, other than counter rotations, which are buy stops, are there people buying because it's such a bargain? Or are the counter rotations going to be used by the longs to get out of their positions? What would you do? See? Christopher, the way you reset, you go to your session volume profile, right click on it, and you put the time of day you want it to reset. So RTH open. So it's at time, not session start, nothing. It's specifically the time. So this is the, anyway, this is the context. So for me, it's short, short, short. If things change and we blow, we start rolling up, then I got to see how far up we come, and then still short. And if things get funky and it's not clear to me, I just don't trade. I just stand aside until either it becomes clear. But for me, I will not be thinking longs. I am, see this? So this is what, now let's put these pieces back together. Short, scale, VPOC migration. Warning Will Robinson, right? Not a long. Warning Will Robinson. So scale, scratch, flat. It's as easy as that. Now what? Let's go back, right? Now remember, we identify locations of behavior. So where's our swings? Here, which we just got. Where else? Let's look. Got to look left. There. So we're up over these swings. Now we have to see, and this is the area, another area for shorts. So let's observe. And again, it's a little funky, right? So let's watch. And it's a little trickier. This is the structure, but this is your obstacle. So you'd have to, is there enough range here to here to here? So this is an outside mean reversion. And I know, per my plan, where my locations are. Got to take the stops at the mid, which we did. Counter rotation to the VPOC for the scale, which we did. Squeeze further into where? Here, which we had previously identified. It's the next area for short. That's just trading as far as I see it, Because I don't know. If you think you know, send me a personal message. We'll talk. Because I want to know. But in the interim, all I know is potential behavior and obstacles, and I'm watching the auction. So a short out of here is back to here. And then hold for this, retail stops, this, this, this. So let's see if this one ferments. All it is one trade. And I think you can see the logic, can't you? So in a trade plan, I have something called a setup. What is a setup? Locations to interact with the market. In other words, it's maybe at best. So maybe we take the stops at the mid and we come back to fair price. That's mean reversion, which it did. Then we start shifting up. That suggests a problem. Don't know. Shifts up, presses. We go to the next location. That's all this is. Outside in, mean reversion. Where to? Back here. Then what? Back on the original trade. The same trade, by the way. Nothing's changed. It's all it is. I'm probing for the location. And I accept the randomness. So why did this one? No, we know why, but we don't know it would, because we could have just kept going to the target. What did we do? Squeezed, took them out, took out all the stops. Remember, we looked to the left. Remember, low volume area, vulnerable, short, same trade. Where to? Well, we got the VWAP. So scale, risk neutral, back here, same trade. That's how I look at it. I'm just doing the same thing. And what I'm attempting to do is get alignment at locations. But I want the stops out. which is why now this was okay. And now this one, we took these guys out. And those, you look to the left, those swings, makes it better, right? Now, same trade, different location, back, mean reversion, and then wherever. Does that make sense? Can you see the logic? Christopher, did I answer your question? Well, Major Tom, it's just a trade. In other words, you have a location, you understand context, and then all you're doing is testing for the right location. It's very random. I mean, that's why trades are random. Otherwise, we just wait for the right bus. Unfortunately, we don't. That's the problem, if you will, or the challenge. I mean, the opportunity cost. So when I looked at this, I also know auction market theory, which puts this target, you see. So this was all okay for me. Scale. Then what? Squeeze. Then what? Outside. Then what? Short. Then what? Scale. It's the same rinse, repeat. Then we either take this out and that's all good or bad, scratch, just another trade, or we get down, we got to get below here and then we go here. That's the trade. That's all there is to it. It's not more complicated than that. If you want to be sure, and I mean you, I mean any of us, we want the sure thing. We're still waiting for the magic 8 ball to come back for the factory to give us the, quote, right trade. The right trade is identifying locations to potentially interact with the market. The next part of your trade is where might it go, your obstacle for your scale. Is there enough range between your entry and a failure to get to here, which is basically it. Then we pull back to where? See the volume right here? That's your over-under. We come back above that volume, we're going to take this out. Not complicated. So let's observe, okay? And if they take it out, you scratch. Well, scratch, scratch. That's how, in my opinion, you probe the market. Because the payday could be pretty good. That's it. And then it's just, gee, I scratched a couple trades. All right. Yeah. But this is still the outside edge. So we have to watch, okay? Here's your micro high volume structure. Probably going to take it out, right? Okay. Let's just see what it does here. Like I said, it's probably going to take it out. Get these guys. Let's watch. So when I put one of these things on, and again, it's just me, I have to get risk neutral to pay for this stop. My stop is above here. If I get taken out, I scratch. My broker sends me the little gift basket around the holidays, and that's it. If we don't take this out and we reverse out of here, then I'm back in this. That's all. It's no more complicated than that. So if you're, and I really want to suggest, complexity does not solve the problem. Complexity creates the problem. This is simple. I think it's simple. What do you guys think? Is this complicated? So Slotterary, that short's about to get taken out. Let's talk about this. Yeah, you're right. It is about to get taken out, except it didn't. Huh. Why is that, Slot? Slotterary is over in the Discord Trader Lab chat. And by the way, the Trader Lab is an interactive community of traders with diverse backgrounds, experiences, and it's a collective experience. And what happens is it's interactive. In other words, you got to have the guts to put yourself out there. This is not about looking good. This is about being in the business of trading. So if you want to look like, it's not a place for egos. It's a place for humility and asking the questions. Because it takes courage. You want to be a trader, you got to have courage. And if you don't, and I mean anybody, doesn't have the courage to put themselves out there, how are you going to have the courage to execute? It's not ego. I left my ego in the Grand Canyon many years ago. Uh, because when you start in this, you actually think you can figure it out. And the reality is, if you go down the track that most retail traders go on, statistically, you're not going to be doing this. So the reason I started the stream was because I got a lot of interest in some of the things I was posting, and it kind of was by popular demand, you know. But it wasn't intentional. I'm not an educator. I'm not a vendor, you know. So I'm not one of those guys that says, "Hey, sign up." Bookmap doesn't do that either, which is pretty amazing. So, but I understand how the market works. And it's only because I've done everything you guys have done. It's not because I woke up, you know, brilliant. No, I woke up the same way you guys did. I started out, you know, like we all do. The thing is, I could not figure, when I was doing system design, and I built trading systems, um, they were problems because they are mathematically based and they are basically indicator based, looking back, not looking forward. And it's always optimization, walk forward testing, right? You guys have probably heard of this. Why do we have to optimize, right? Why are you guys going in with the little screwdriver tweaking your oscillators, your MACD, or your moving average, or your envelopes, or your Haganashi? Pick one, you know, I don't know. Pick anything. Why do they have 100 indicators in a software package? Why? I think you know why. So if that is why, and if it exists, and if they need 80 or 100 to sell you an indicator-based software package, which is what we all want, retail, then why are the retail outcomes so poor? Maybe it requires a different thought process and maybe even some different tools, or at least a way of understanding how the market works. Because when we're focused on an indicator, we're not learning about market mechanics or the behavior of these participants. We're trying to find a way to get the darn thing to fit. But the reality is we're trying to fit an indicator around the market, whereas the market is not interested or cares about our quote indicator. So we're always chasing the market from behind. We're not in alignment. So the thing about auction market theory, the volume profile, and these market mechanics, you know, is to understand the behavior. Why? If you know why, you might be able to use an indicator that's in alignment with the current behavior and context. And intraday, it changes also. This behavior is not the same as what we had earlier. But what it is if the behavior is down, then counter rotations, subject to your trade plan and time frame, are to be sold. So I can't get long. And it doesn't mean you can't. I'm just saying I can't. My job is to stay in alignment. If I understand that, then I'm only trading one side. I don't want to join the weak hands. And it doesn't matter if we get a 15-point rotation up. I want to sell a 15-point. Me. Again, I'm only talking me. You may say, hey, I could sell. If you're one of these guys who can rock and roll, buy here, sell here, buy here, sell here, you know, buy here, but whatever, that's great. I haven't observed people being able to do that and stay in the business. The guys I know stay in the business are swinging for these larger rotations because you've got to recover the cost of probing the market. And for me, if it's a 3-point stop-ish or less, I think that's pretty good in the ES. I don't know about you. And I can do that because of microstructure and Bookmap, you see. So that helps me. And I don't change what I'm doing. So if I got here and I took a stop, it doesn't, other than being annoyed and those things you say to your monitor when in, you know, private, I release my frustration and I say, okay, nothing's changed. It's just location. Let's get short. Let's get short. Let's get short. Not a trade recommendation. Where to? Stops. Where are they? And then here. So you know this is the trade, right? Doesn't mean anything more than it's a trade. Can it come back and take me out? Of course. Is that okay? I got to be okay with it because I'm probing the market for location. That's all I'm trying to do is stay in alignment. And this outside edge, so you know what this is what's the context. Downtrend, higher time frame, mean reversion. mean, as in mean in quotes, is outside in. So this is how, at least for me, how I engage in this current context. So my higher time frame context is down and I'm in rotation now. So it's changed. So I want to try to get outside to come back to this. And then this. So just remember, this is next on the hit parade. And we have a long ball, which I have no idea, which is 42.15, wherever the heck it is. Down here someplace, right? And I have no idea. So it's right in here. So that's the long ball target, which I will trade towards, unless things dramatically change and we leave all this behind and come up. If we start coming up, I'm just done. I'm not going to play the long side today. But again, it's a function of time frame. And for me, I want the bigger trades. So I hope that makes sense, and I hope that's useful. And there's no right or wrong in trading, by the way, guys. What's right and wrong is your trade plan and following it. So if you have a trade plan for, this stuff, that's okay. I don't make judgments. But to me, if I'm going to risk 3, and I don't trade a 1 lot, so let's just say 3s, there's got to be range, and there's got to be something that justifies it. That's it. Any questions? So we're in this trade, not a recommendation. Johnny, you asking about volume profile versus TPOs? Is that what you're asking me? By the way, just as a reminder, I will be streaming on Monday, and then I'm taking a week off for, I guess, a little break, Um, so from Tuesday, I'll be back next Tuesday, August 30th. So I know you're going to miss me. Well, maybe not. But I will be back. In the meantime, grab the link from this video. You can watch it again after the market if if there's anything here that interests you. Also, up on YouTube, I have a number of trend configuration videos, which kind of are going to show you something similar to what you see me doing right here. Because what happens is, often in a trend configuration, unless it's just everybody's bailing out the window at one time, you get that range move, the big move. Then the market goes into a different context, which is consolidation. That's what we're in right now, consolidation. In other words, rotational trade. So, but if the trend is down, I just want to reiterate, what am I going to do? I'm selling it. But I'm not going to sell it down here. I've got to get outside to get the mean reversion. So I'm now in a different context. I'm in mean reversion. I'm in mean reversion. So I can only go short because the context is down. And I'm going for this for my next target. Why do you think I'd go for this? Anybody? What do you think? Anybody got an idea? Well, there's another reason. Stops. There are longs who play in this. So it's reasonable. Now also, let's look at the distribution. Outside, retail, where's too low? Where are stops? Outside edge. Now, it may never get there. It might get there. Yeah, right? I don't know. By the way, see this right here? Where do we check? Right here. Price check. Price check. Price check. Aisle 3. So we are accepting this. So, and you'll notice, and this is what I find so interesting, and then when I started looking at the market I don't know where I fit with everybody else who uses volume profile. I will tell you, many years ago, I was in a chat room with guys who were market profile traders, and and it was TPOs, and volume was just becoming available. So I was using TPO and volume kind of put together, you know. So I was watching the different behaviors, the time-based behavior, and so you know what a TPO is? They're 30-minute, they call them brackets, but basically like a 30-minute time frame. And initially, when the market profile was created by Peter Stottlemyre back in the 80s, what happened was they didn't have volume. They only had time. So time became a proxy for volume, which means if the market spent time in an area, it was assumed more volume would take place there, right? Which is logical. So they built the profile out, this structure, based on how much time it spent, and that became your proxy for volume. Then when volume showed up, it was much more accurate because the clock is, an artificial thing. Though it was a good proxy, time is not relevant to the auction. It really isn't, other than open, close, lunchtime. It's relevant only because of the differential in volume, but not anything else. So I started looking at this VPOC migration, and I was interpreting it saying, well, what does this mean? Why would it? And I started, it would shift up. Let's just say it shifts here. I go, well, and then it would shift down here. I go, well, what's that? What's that telling us? And let's just say we had some disagreements about the interpretation. So, apparently I didn't stay there. So over time, my view of the mechanics of the market changed. And I read more into microstructures because of what it meant. In other words, what does this mean? And then initially, I was doing like 5-minute we didn't have this. We didn't have a Bookmap. All you had was your regular charts. So I started drawing profiles over microstructures in having micro profiles. I went out of my mind trying to identify this behavior. Now I can do it much easier because of this. Remember, wasn't this where our over under was, right there at the short? Right there? And the stop was there? Do you think that's pretty good? How did I know that? What I know is what created it, the auction. What I don't know is, are we going to take it out? That's trading. What I know is, if I wasn't short and I saw this and this, I could have shorted here. And my stop would be over here. I know that. I know if I get below here, and you notice the reaction, that this is my target. Guys, has anything changed? Yeah, Christopher. I use volume through all of it. Whether it's the higher time frame. To me, it's all based on volume. Because in the end, what volume is the interaction of a buyer and seller. And there's going to be areas where there's not a lot of interaction, like up in here, lower volume, outside edge of a distribution, which is what, remember, and I don't like to, I'm just going to say it's not about being right or wrong. It's about understanding behavior. It's really what it is. What is the market doing? What's it trying to do? Where might it do it? Who's vulnerable? Where? And again, we don't know, why not this? Why not be here from this rotation? I don't know. Random. Why not go straight down from here? I don't know. Why come down, come back, and then fail? I don't know. So I don't need to know because I accept I don't know. That's what takes me off the hook. If you think you need to know and it's about being right, you're creating an impediment to your ability to stay potentially aligned. Because if it's about, I know I'm going to be right, that's not trading. That is not trading, guys. Trading, in my opinion, is interacting with the market when at a location that has some sense to it that is in alignment with the higher time frame participants if they're active. The higher time frame participants are not buying, in my opinion. The higher time frame participants are using counter rotations to sell. We're the guys with the stops. This is the exhaustion. See? So it's all here, I think. It's logical. If you're a counter trend trader, God bless you. Me, not so much. And it's not that I can't. It's that where's my opportunity? It's to here. And I understand why. This side of it, how far? Was it to the VWAP? Was it to the mid? Where was it? This was it there? Was it there? Where was it? I don't know. We tried there. That was fine. We tried here. That's fine. We still got the target. Nothing's changed. And it can still take out the low of the day, and we have 42.15 below. You should write this down. And again, I have no idea. Doesn't matter. See, I don't worry, quote, about that. My worry, and it's not worry, but my need is to get risk neutral, to buy the trade. Then I can sit back and go, well, now what? I don't know. Oh, it took me out. I scratched. Good trade. Here it is again. Scale. Comes back. Doesn't take me out. Good trade. Comes back. Doesn't take me out. By the way, I have additional setups in here to add, which I don't discuss in the Trader Lab. The fact is, if you understand it, you can now dance with it. You can interpret it because you understand how the market works. And you understand retail trader behavior. Guys, if you make it simple, you'll be able to do it, in my opinion. And I have to say, past performance, not indicative of future results, not trade recommendations, etc. This is one way to kind of reverse engineer and then put it back together. If you keep it simple, I think you're going to have a pretty good shot at understanding. Without understanding, it's chaos, isn't it? Well, Rob, insanity is part of being a trader. You have to be a bit, strange. Yeah, Johnny, you need software basically that gives you the daily time frames. If that's what you're asking me, higher time frame structure. This kind of thing. This is your higher time frame. So all I'm doing is, for me, it's the volume supersedes anything. The book, all different time frame participants. I do look at the book. I do see where the liquidity rests. I look at the strikes. There's more, but not really. Because once the rubber, where does the rubber meet the road? It's the interaction between the participants. If I have alignment with, and I can read the order flow, it can help. I also know the order flow can be quite flaky. And misleading because there's algos in there that trap retail traders. I understand, So, like this here, this was fine, but what's their time frame? I mean, we saw this for a potential short here, which we didn't take. We made a new high because this is all BS to me. Then that was viable short, scale, scratch, short again. No liquidity really in the book up here, you see. Now here we come down and you see the liquidity coming down. That's pressing. This is pressing. This is all fine. But it's different. What's different, and this is just an opinion, is I don't trade on the liquidity. I can't, because their time frame and intent is not the same as mine. My time frame is to here from here. And I see that pays the bills. 45 to 35 is 10 points. Okay. And a scale to get risk neutral. I'm all good with that. With a stop that's under 3 points. I'm good with that. And if I'm running a runner, and we only talk 2 lots in the Trader Lab, I'm going beyond. Because I got 15 out there and potentially new low. Not a recommendation, but that's my thing. So, Johnny, I'm getting aligned. I mean, as best I can, trading a trade plan that once we shift into rotational trade, I'm in an outside-in mean reversion. This is its own isolated context that is overlaid on a higher time frame context, which is south of the border. Does that make sense, everybody? Well, Major Tom, I use Investor RT, but there's other software packages that, if you're asking about the higher time frame, but I can't comment on them because Investor RT was like the first significant professional piece of software that had volume profile, and the thought of learning anything new at this point in my life is beyond. I don't have the patience. So I just use Investor RT, and if you come to the Trader Lab, if you haven't come there, you can ask those guys because they're all doing volume profile, auction market theory pretty much, and they have, they use different products, and they could probably give you their insights, whether it's Sierra, Toss, I can't even name them because I don't think about it, but the common things that are up there, Trader View, I think, Yeah. I can't even tell you, so I'm not the person to ask. But if you guys are interested in the Trader Lab and the community, it's available to everybody. Plus a lot of free education, stocks, options, crypto, stops, icebergs, order flow, all that. So it's all free. It's every day. Something going on. We have a specific streamer for crypto who just is a crypto specialist. Not my thing because I'm a futures trader since 1980, so I'm kind of stuck in a groove. So I kind of stay with this. But it's this process, so you understand, is generic across all markets. So, I mean, let's just say guys I know trade crude, trade bonds. You pick it, NASDAQ, it doesn't matter. Jelly beans, if there's a market for it, it auctions because that's where buyers and sellers meet, and they agree on a price. So this activity takes place all over the place. What's fair, what's unfair, and different participants have different time frames. So what's fair? Right here, there's interaction between a buyer and a seller. By the way, here's a target, right? Got to pay attention. Well, so that's the kind of thing. Right here is interaction between a buyer and a seller. Too low, too high, boom, break away. Here, buyer and a seller. High volume node, retail price, too high. Pullback, price check in the micro aisle. I think of these like your convenience store because it's a small auction, but it's the same behavior. And there was a retail price between just these guys in here. If you break away from it, it's too high. We ran out of buyers. And then if the sellers are looking for buyers, what do they have to do? Think about it this way. They got to lower their price to find a buyer. Please buy it, please buy it, please buy it. And now buyers, and it could just be short covering, I have no idea, buy it. Buy it, buy it, buy it. We come back to the retail price that was too high. Buyers go, nah. Down you go. Logical? Increased risk reward. Johnny, I think it's a matter of time frame, So next target. Is this making sense, guys? Can you see why? Why? It's why. And then how. So it's context. Then it's where. Right? Identified ahead of time. Then how, microstructure, stop picks, mean reversion from a location, outside edge. Where is the outside? That's why they call it mean, because you might have to probe for it. And unless we blow through all of this, nothing has changed. This is, in my opinion, where it pays. Not this. This. So Johnny, you see what I'm saying here? Short, scale, target, potential now rotation back in, watch, and hold, runner, target. not a recommendation. Is this logical? Uh, Major Tom, the trend is down. Higher time frame targets around 15-ish. And again, it doesn't have to get there. Low of the day is another area. So it's based on the number of runners, and how you manage them. For me, anyway, I hope you guys found this useful. You know, um, this is what we do in the Trader Lab. Try to stay sane, try to be disciplined, try to learn to auction market, understand how the market works. If you're going to trade, I think you need to understand the market. I don't think it's a built on plug and play, which is really indicators. If you think this business is plug and play, I'm going to suggest you might be very disappointed. If you think somebody can just plug an indicator in, overlay a few time frames, and have an ATM in the basement and make a living, I'm gonna suggest to you you're gonna potentially be disappointed. Um, Again, it's not a recommendation that this is the solution to what I'm doing here. It's just one way to slice and dice it. But in the end, if you don't understand how the market works, I don't know how you can deploy any kind of strategy. It starts with understanding. And most retail traders never get to a place of understanding what they're doing because they're going down the rabbit hole of indicators thinking, well, it's the right combination or it's the right tuning, right? Haven't we all thought that? I have. When I developed trading systems, wasn't that what I was doing? And then we tend to go maybe just more indicators or maybe a different indicator or a different combination. And what you're going to find is the randomness of the application of an indicator because the indicators are not sensitive to context. That's where the issue, I think, is most difficult. Because if you're looking at an indicator, you're only really looking at them for certain behaviors. Well, the morning behavior was straight down. Now the behavior is rotation, mean reversion. It's different. See. So anyway, that's just my little 2 cents on that, and it may not be appropriate, for you or, it's just my truth, and that's why I do this. When I started trading, there was no information. We didn't. You had two choices: you buy a book, or you go to a seminar. There was nothing else. There was no internet. There was nada. So that was about it. You guys are at the opposite end. You got the internet. You got so much information you can't tell, as they say, shoot from Shinola. Shoot. And you go down these rabbit holes, or you subscribe somewhere and you end up with nothing for your effort and your time. So I'm just suggesting maybe you kind of dust yourself off and think about what you're doing. If you have a positive expectancy and you're a profitable trader, then this conversation's not for you. Um, you know, but if you've been doing this for a while and you tend to be waking up in the same place, like a trading groundhog experience, then consider maybe looking into some other options for yourself. Because a career, if you want to be a trader, and I mean professional trader, you got to be doing what the retail traders aren't doing. Because statistically, you know what their statistics are, right? Anybody not know? Trading groundhog, yeah, Matt. I don't know. Yeah, DNT batter, yeah, over 90% of retail traders fail. Um, I'm going to ask you guys this weekend, why don't you evaluate your trading career? What have you done? How's it going? What are you doing differently? Or are you doing, let's just say, manifestations of the same thing with similar tools without a different outcome? If that's your situation, I think it's really time to call a timeout and do a reevaluation. Because all you have, in my opinion, unless you're independently wealthy, and this is a hobby, is time, and you have your account. If you're trading and you don't have a viable plan, you're going to either run out of time or run out of dollars. I don't think that's a good plan. I think you could do better. Now, you have to decide what better is. I'm not saying what I do is better than anything, but I think I'm showing day after day here that there might be some rationale why understanding market mechanics and behavior of the participants is really the secret sauce. And there's no secret; it's right in front of you. It's just that we're brought up in, I think, many ways. Vendors sell indicators. How to use this, this, and this. Combine the MACD with the VWAP and the da-da-da. Really? Maybe. But do you think maybe understanding the mechanics of the market might give you some advantage over the traders that blindly sell the VWAP or sell the mid? You know? Do you think using their behavior becomes an asset and not a liability? So that's why I always say, think like a retail trader, don't act like one. Because we know their behavior. It was my behavior. I'm no different than you. I used to sell the mid. It was brilliant. Oh, I'm going to sell the mid. Splat. Then it was, why am I getting taken out at the mid? Huh. Look at that. I guess there's some stops there. How about that? Maybe I shouldn't do that. Maybe I should wait for the stops and then see the behavior afterwards. Oh, that seems better. Maybe we should make that part of our plan. Maybe that's better than stepping in front of the stops, even if the trade runs away without me. Over time, does that discipline yield better results than the couple of moves that you miss over time? Are you in this, Tom, for the long term? Is this your career? Or what? Do you want to gamble? Go to Vegas, see a show. Get the buffet. You want a business? Losses are cost of production. Doesn't make me a good or bad person. I'm just running a business. Do I have a vetted plan that I have confidence in and I have the courage to execute? Yeah, I did the work. I did the research. I saw things that repeated over and over again. I had to change my thinking. I had to be willing to walk in a different path than the other retail traders. I had to take criticism because I was lonely. Because when I was starting to do this, 1985, this, but not this, market profile. I learned market profile from Peter Stottlemyre. He created it. He taught me market profile. I couldn't trade with it. I spent over a year going, what the heck is going on? This makes sense. I can't trade with it. Would you stay persistent under those conditions? You see? So I'm just suggesting to you guys that if you're not getting the results, if you're tweaking, you are chasing and you're doing an optimization. You're not probably conscious of it because you're going to look and say, if this was just adjusted to this, I would have caught that move right here. Or, gee, this time if I was using a 15-minute candle bar, call it whatever you want, or a 9 EMA SMA, but maybe the 20 SMA on the Keltner channel and maybe 1.5 deviate. Do you know what I'm saying? That's curve fitting, guys. Oh, and then I got to wait for the 30-minute, the 15-minute, and the 5-minute, but what? That's all curve. It has nothing to do with context. If you can understand the behavior of participants and how it's reflected by the true reflection of market behavior, which is volume, I think you're way ahead of the pack. I don't use one indicator other than tags, which are not an indicator of retail stops with the stop iceberg, because it just helps me see exhaustion. So I find that useful. But if I don't see the exhaustion, it doesn't supersede what I do. In other words, but I have a few years of doing this. So if what you're seeing looks confusing, it's because you might be viewing the market through a different lens. And those indicators, we become dependent. But if you think about what an indicator is, and think about it, pro and con. There's pros and cons to everything. There's to everything, even this. Think about what you're trying to extract from the indicator. Think about the ability of that indicator to get aligned. with what the context is. Context is king. And if you take a look at the way I overview this, and you know, by the way, I'm going for low a day and 42.15, who knows, right? And by the way, I don't worry about that. I don't care. Absolutely could care less. My job is already done on that trade. This is the process. If you understand this, now you know what's going on. You absolutely know what's going on. The job of the market is auction. What's too high? We found that out at FOMC high with that wick, right, in that reversal. What is fair? It trades inside itself. That's balance. That's a consolidation. Two sides are active. Hey, Louis, what's too low? What's too high? I don't know. Yesterday, inside, indecision. Uh-oh. Warning, Will Robinson. Potential squeeze, fail, or whatever. Gap out. See you later, alligator. Time to get short. It's that simple. Now the interaction of the participants in the developing time frame, the microstructure. How do we observe it? Just the volume. And that the tool is a profile, and all it's showing you is price and volume. It's not an indicator. It's just showing you price and volume, and it's not time-based. Are you guys with me? Time frame? Well, fractals. So for me, I'm trading the higher time frame, but I'm using all of it as a volume profile in multiple time frames or fractals, and I'm not trying to get aligned for the larger move. Why? Risk reward. I want to get paid. I want to be able to also cover my cost for stops, which is part of overhead, cost of production. If I'm in a business, I know I'm going to have, if I'm manufacturing, I'm going to have jobs that I don't get paid on. I'm going to have jobs where I take a loss. And overall, if I have a net potential yield, I'm going to be profitable. Isn't that how you run a business? Then the context. What is that? I have to understand the potential and also recognize when it might change. And I do it in all time frames, which relates to this. But the context, as you know right now, is outside in. It's not bullet train. It's bullet train rotation. So now I'm in the down bullet with outside in. Outside in. I'm aligned with the higher time frame. Guys, I'm losing my voice, so you know I don't have much more time. And I'm trading outside in. And then Bookmap lets me see inside. So I can see the order flow, I can see that stop exhaustion, I can see microstructure, which is this in the microstructure for execution and trade management. Does it make sense? No, I don't reverse Major Tom. If it goes against me, I'm out because it's a structural failure. In other words, context for me is short, right? And if, let's say I got in at the mid and I got stopped out, I don't go long because I have my context that says short only. Unless something dramatically changes, then I go, hey, I don't know. Because when I get into I don't know, I go, I don't know. In other words, I go, stand aside. It's not clear. In other words, I have a trade plan that aligns with my perception of context. If it changes, and now I'm going, I don't know, because it can change in the more shorter term, while the higher time frame is still down, but it might squeeze further, right? I don't know. If I see that, I'll just stand aside and go, I don't know, until I see another location of potential behavior. By the way, what's the next potential area of behavior? Trader Lab? What's the next potential area to observe? Anti-luck, I don't look at the inflows, outflows, rebalancing. No, I stay in the real time. So I don't look at that, I don't look at market makers. I don't think too much about that. I have looked into, market maker behavior, option hedging and things of this nature. I've looked at all that stuff, but I find, and then this is just me personally, Anything extraneous to what is right in front of me creates conflict. So I have stripped it down. Right, guys? IB. The initial balance is the next location to observe, which is 42.34.50 for stop pick, not a recommendation. Let's observe it. So I used to look at everything, by everything. I know about everything, but let's just say a lot, you know? And so even option expiration today, it doesn't change how I approach the market. And the reason I kind of came to that was I used to put all these inputs in, and all it did was confuse me because how do you prioritize like it's option expiration? Well, what does that mean? Does that mean I don't trade? It doesn't. And let me give you the therefore or the why. The why is everybody in this market, or I don't know about everybody, but let's just say the major players in this market which create the outsized moves already know all that. I perceive, other than a report that might come out and shock the market, and then it has to reprice for the new input, that it's all known. And the things we don't know are known. They know. And who are they? Those who know more than we do, which is a lot, because we don't know anything. We're retail traders. So if I assume I know I don't know, then I can't take what I think is relevant that all others already know. Because the big houses, the Citadels, the HFT houses, all these guys, they all know this stuff. It's in the market. So where am I trying to go? I'm trying to stay as close as I can to the market. I know this is my next location to interact right here. I also know there's stops above here. So this is my area to observe, right? And let's go back to one of the rules. Where are the stops? Look at the behavior of the book. This is like a lure. I consider this a lure. Now, if the market turns right here and makes a beeline, fine. Doesn't matter if I wasn't in. But if I have a runner on, where's my stop? It's not going to be right above here. In fact, where's it going to be? Not where the stops are. How might I use it? Depending on the behavior. Here's two possibilities. We come in, continue, then this last swing low is an obstacle. We get below the last little swing, then low of the day, right? Right. Where is that thing? Down here. And 15. We come back above, we can squeeze and come back up here. That's the possibilities. If it comes, I'm already telling you, this is my trade plan, not a recommendation. So sell here after stop pick. No stop pick, no bueno. Takes it out, comes back up here, observe, pullback, continuation. So all I have is shorts, not trade recommendations, gang, because it's at best it's maybe. Right here is potential exhaustion. So let's observe it. Not a recommendation. We're just going to take a peek. This is like looking behind the financial curtain. How do you like that? Let's take a peek behind the financial curtain. Because that's what I'm doing here, guys. We're looking behind the financial curtain. We really are. We're looking inside, and we're anticipating retail trader behavior, which is stops here. Also selling. But what's my rule? Doesn't have to be. I'm just saying for the Trader Lab, stop pick. If I don't get I'm not joining these guys. Who are they? The 95 percenters. Not my plan. My plan is to use the 95 percenters to my advantage, which is stops. Now, it's pretty tempting to run right in here, isn't it? You see how the book is pressing here? I think that's just, well, what's the term? I don't want to say sucker play. I'll say a lure. Is that better? Well, Corey, as far as how you manage the trade is kind of a different conversation, and I don't get into that because it's really a function of the individual, and it's really different, So here's our stop pick, okay? So now let's watch. And remember, we're touring. let's look up above us. Here's a consolidation. Always look to the left. Here's the high volume right here. Stops. Now we're observing. Everybody on track. We're going to watch this area. Just watch. Nothing to do. Tourists. So we're just watching. I'm looking for exhaustion. Now remember, we can come back, we can do all this. So let's watch. This area, we're observing it, right? So let's just watch. Can do anything. Tourists. Remember, clueless. So we're observing behavior, not a trade recommendation. And remember, the outcome of anything is random, so we don't know. Watch the behavior of the order book, and right here, and this. This is our thing to observe, not a recommendation. These guys are trading. Interesting, isn't it? They're pulling above, so they're opening the door. See how the book flipped? Nothing you can do about this. So nothing to do. If this was something you engaged with, there'd be a small stop here. It's not a big deal, I don't think. So now, stand by if that was your trade. Where are the stops now? So we're going back to this. So we'll have to see. This is, what this is trying to get back in alignment for the continuation. We have lunchtime, which often we get counter rotations. It's still a potential short in here. It's just tricky, which it always is. So let's watch this behavior here, these algos right here. See how they pull and then flip? This will get you into trouble. So this in and of itself is not, I don't look at this and do anything with this kind of these guys, because this is just algo. So I don't do that. I am interested in certain behavior. I want to go back and look in the book, just see what's what here. So I'm a tourist now. I got nothing to do. But I'm still going to be looking for an opportunity to come outside in. But nothing to do. So I have nothing to do here, but I am still stalking an outside in. So so if I get involved up in here someplace, this is my first obstacle. And then again, continuation down, low of the day, 42.15. So not trade recommendations, and we might just chop around, come back. We can come back. So, we can come all the way back here, the mid, wherever that is, back here. So this is all, and we can also come back up into this again. So I don't know what it'll do, but I have to sit and wait now. So I have nothing to do. If I get a setup here, remember what's vulnerable? These guys, 40. So as Dirty Harry used to say, or did say, still might say, do you feel lucky? So we're inside here now, so I have to be cautious and I need to be patient because of retail trader behavior. That's what I've got. So I just sit and wait. There's nothing more to do. But I am stalking. I hope that's useful. Yeah, 42 is kind of the retail price. We can come back and check it when we squeeze these guys out at the VWAP. So that would be an area to observe. And in mid is up here, so we can go back into the squeezed area and, do the same thing we did before. Come back outside. See? Mean reversion. So we're still playing mean reversion. The thing is from where, right? So if we might only come back here to this high volume, pop it, and I got to look to the left and see what's over there, and then continue back to here, to IB, and then, here, or not, here. Notice we got some liquidity sitting in the book. Not huge, 300, but it's there. So that could be a target also. Not saying, just maybe. So now it's just wait. So now I sit back, and I would think, based on what we've discussed here, it's been a pretty good morning, right? So not really much abuse, very small abuse, and the game is still on. It's just now, it's kind of moving. If you're a battlefield strategist, you're moving your troops around, You're responding to the other side. I look at these like counterattacks. So where are they going to run out of energy and we're going to push back? If we're the sellers, that's all, So, and I don't know where that is. So I have to wait for a location, and I prefer to get stops picked off or not. Because something like this, like right here, I can read selling, but can I short that if I got this? See? So for me, it just leaves it, right here is a short trigger, but it's not in alignment. It's like in nowhere. So when I see triggering structures, they must be aligned. It's only a trigger. Where is it? Well, I got stops here. I don't want to step in over here, get a counter rotation, and then have it come up and squeeze me, you see? So I have to let it go. And if this thing comes down and does that, I got to accept it. Anyway, I hope you find this useful. If you want, grab the link above in YouTube if you want to watch this again this afternoon, after the close. You want to abuse yourself. It'll be available probably through 6-ish Central Standard Time if you want to. It's not that long. The other thing is, if you haven't visited the Trader Lab, there's an open invitation to all of you to come to the Trader Lab. It's a great community of traders. diverse experiences. We leverage our collective experience to get better. Go to bookmap.com, join Discord, go to the Trader Lab chat. You won't be solicited. You don't have to be a subscriber. And there's loads of free education. I think education is good. Free is better. And if you trade stocks, it applies. If you trade options, crypto, if you're interested in the order book, different details, it's quite excellent. And if some of you guys have been the route of vendors and subscriptions and the magic indicator, you already know. And I think free is a much better option. That's just me. Also, if you come to the Discord Trader Lab, there's 60 PDFs you can download of these behaviors. Also, an introductory video just on to understand some of these mechanics and auction market theory in the profile, which will save you tons of time. You don't have to go down the rabbit hole with any of this. Just keep it simple. If you keep it simple, you'll make tremendous progress, I think, in a short period of time. Many of the traders in the Trader Lab have really, changed their approach, and it didn't take them a lot of brain damage to do it. It just takes time to change how you view things. If you're always looking at indicators, you're hung up on looking at one line crossing over the other, a divergence. This is different. We're just looking at the participant behavior and drawing conclusions, because in the end it is them that create everything. Willie, retail trader behavior, just think of what you do. You already know it. What do we do as retail traders? So how do you learn retail trader? Where do you put your stops? Where do you interact with the market? Do you sell the mid mechanically or the VWAP? What do you do? Where do retail traders put their stops? They're here. So what do I anticipate? Market's going to go there. And again, it doesn't have to. It could, this could be the top of the rotation and we go down. It absolutely can do that. And my trade plan requires me not to get involved. I mean, why? Because of what retail traders do. They're the most consistent group on the planet when it comes to traders, and they're most consistent losers. So what do? Well, if I know what they do and they lose, maybe I shouldn't do what they do. Maybe I should, since that's, I think of statistics, and if there's over a 90% probability that what they do is they're going to lose and be out of the business, then maybe I can use their consistent behavior as an asset for me. That means don't do what they do. Where are their stops? Here and the mid, Are they going to get taken out? I don't know. That part's random. But do I want to be short here when the stops are there? I can't do it. And believe me, there's a voice in my head that says, you're going to miss it, you're going to miss it, get short, get short, get short. That's FOMO. That's my emotional state. And it's a disruptor. It'll make me do crazy. I know that. So over time, it's not, if this is the top of the rotation and we take out the low now and hit my targets below, I'm not on it. Other than the emotional state it generates, I know over time it makes more sense for me not to be engaging here, but to be engaging after this. Let's hang out a few minutes, see maybe if we can see what it does, see if the logic makes sense. Inverted FOMO. Exactly. And remember, the emotional states are a chemical response, fight or flight, And when you're getting triggered emotionally, you'll feel it. What I found was I'd have an out-of-body experience. Somebody else would jump in there, grab the mouse, and start clicking. It was like, really? So this looks like a short, doesn't it? It does to me. It looks like a short. I mean, it's behaving exactly like a short to me, except for this. So I can't trade it. And there's something yelping in my mind right now saying, sell it, sell it, sell it. Because if we were in the right location, it's a trigger for me. So I can't do it. And I'm conflicted. I'm feeling it. I want you to know, the feelings don't go away. It's the idea of understanding what the outcome is of responding to the feeling, not responding to the trade plan. So maybe we'll see what it does from here. By the way, if it goes on and takes out the low, you will hear barking and yelping, but you won't see me chasing it. If it comes up here and takes this out, then you're going to see why I have a trade plan. Now, what happens after that, I have no idea. I may not still have a trade, or I may have a trade and I may get stopped out. That's okay. But unless I get certain requirements based on my trade plan, there's nothing I can do here. I just sit, I'm a tourist. Hope it makes sense. Joe, it's a short for me theoretically and not a recommendation because of the context, which is down, you know? That's really, really what it is. FOMO fighters. Yeah, there's a group that name, right? So let's see what we're doing. So I may go through that little FOMO experience, right? So we'll see. You guys could probably watch this on your own. I'm kind of going over time here and I'm going to get penalized using too much bandwidth and electricity. So this is a cell structure, you know, with a problem. So it's a nada event. And by the way, so who's asked me why I'd be selling it? Um, yeah, Captain, I'm familiar with that. I don't use any of that. Yeah, Joe, context is, and it takes time, because you got to look in multiple time frames to understand context. This is daily RTH, so each one of those candles is a day. And basically, this is a consolidation. So, we were looking at this. This is FOMC day. Thanks for playing. Extreme, wick, break, come back inside. This was the thing that kind of threw me a little bit. I saw this pick and come back inside. That set up yesterday, which was two-sided trade. We opened in fair price. So it was short, 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 long in the afternoon, inside bar. And one way or the other, you're going to come out of this. We were assuming it's going to be the downside, but until it is, it isn't, There you are. So now context is what? If this is a consolidation, and remember, auction market theory, oh, it's on sale. I'm not paying that. So it's on sale. We can't get above there. Too high. Too high. Now, yesterday I didn't know. I thought we could get up here, take out buy stops, and then fail. That to me would have made it juicier. But it doesn't matter. Inside, and we were trading at retail, which is this price right here. So we opened at 77 or something. So that's retail. So there's acceptance. Now the problem with a retail price like this, in a configuration with an extreme, with all these longs in here, with their stops below us, is there's fuel. So once you come out of here, this is where the context is. Everybody out the window together. So then how do you stay aligned with it? Outside in. In other words, when a counter rotates, if you have a plan for it, you're selling it. So it's, how do you do that? And so now we're putting the pieces together, fractal, right? Then, and this is what we've been doing. I think we had a short, where'd we have a short? Here to here, I don't remember. Here to here to here, right? I think we tried one around here. I don't remember. I can't remember anymore, but somewhere. Now we're looking for another one, and there's nothing to do. So right in here, I have nothing to do. I want this to go, and then this is the target, and then low of the day. I don't have anything. I have a triggering structure, and my trade plan says you can't. So I got nothing to do. Me. Now you, when I mean you, I mean anybody else, you can be selling this. And if you're willing to, if it's up to your trade plan. My trade plan, I want these shorts out. This is because I need the range to scale to here also. So, but this is a trade, except it's not for me. But you can see all the pieces, right? Does it make sense? So again, I don't, but I think I pretty well nailed this pretty good, except my trade plan, and which is not necessarily your trade plan. You know, I'm not saying also I would not be taking this, except let's just say the rule is this. So, but this is the trade, so it's the trade's working, you know, but not my plan, right? So here. But I think you can kind of, if you can put these pieces together in the sense of context, which is the toughest part, I think, of trading, is the idea of alignment and not getting caught up in this stuff, I don't want to be in this thing. I want to be with these guys, see? I want to be this and 15. So why would I play in this and get out of alignment when my whole goal is to get in alignment with the bigger time frame, the higher time frame, which are sellers. See? Anyway, I hope you found it useful, guys. Again, I won't. By the way, I'm going to be off next week, Tuesday through the following Monday, returning next Tuesday, August 30th. If you want to make a note, just so you don't think I've gone south of the border. The other part is, in the meantime, if you if you want to be part of the Trader Lab, you're all invited. You go to bookmap.com, join the Discord chat, and come to the Trader Lab. You don't have to subscribe to Bookmap now, ever, never. A lot of free education and a great group of traders where we try to leverage our collective experience. Our senior trader has over 54 years experience. And then we have, of course, newer traders, and we all work together to get better. Many traders have done the same thing you're doing or have done or whatever. We've all gone down similar paths and also different ones. Just depends how long you've been doing it, right? If you're into stocks, options, crypto, whatever, we cover all of it in there, and it's all free education, not to mention order flow, which I think at some point, if you're going to be in this business, you need to understand how to use tools like Bookmap. Because remember, no matter whether you use a tool like this or not, your competition is. So can you learn to use it effectively? And it's a specialty tool. It's not a plug and play. And if you're used to indicators, no, this is not the way this works. As you get into more levels of sophistication, there's more nuance. So you really, in my opinion, need to kind of make this, is this a career choice? If it's a career choice, maybe take this weekend, think about what are you doing, what works, what doesn't work, and are you kind of jumping from indicator to indicator looking for the quote magic indicator that might not exist or the right combination. If you're doing that, we've all done it. But maybe that's not the way to go. Maybe you need a different approach. That's all I can say. So thanks again for being here. Thanks for being part of the Trader Lab. Remember, I'll be off next week. If you got something out of this, grab the link up on top in YouTube and you can watch it again up till this evening. In addition, I have videos posted on YouTube of trend day configurations. You'll see a lot of similarities to what I'm doing right here. And then maybe you'll get a little benefit out of getting a better handle on the context. Remember, the target on this thing is the low and 42.15. Have a great evening. Have a great day. Have a super weekend. Thanks for being part of the Trader Lab. And by the way, I do continue this narration in the Trader Lab intermittently during the trading day. So while this is the only time I do the stream, because obviously I do other things than this, and I have to pay attention when I'm doing those other things, I do drop in and narrate audio. So unlimited number of you can be there. Just kind of stay on that voice channel, and also keep an eye on the chat. And you'll know because I post in the chat going on audio, so you can just jump on the stream, and it's unlimited. Thanks again. Have a great weekend. Appreciate you all visiting the Trader Lab.